Hi, it's Victor here from Trend Following Trading for Beginners. And in today's episode, I want to talk about what we can learn from the recent spectacular share price movement in Tesla and how using a simple trend following trading system can help you to capture big, large price move in the future. Coming up next. Okay, Tesla. Has anybody bought Tesla or got Tesla in their share portfolio? If you have, well, I have to say congratulations. You make loads of money. In fact, probably at the start of the year until now, you earn about like 40-50% already, possibly higher. And for those who haven't got any Tesla share in their share portfolios, well, hard luck, you missed the boat. However, there's things that you can learn from the actual share, the movement, and also from the share price, so that next time you see similar things like this, you'll be more readily available to take action and to make money out of it. And all those who have short the Tesla shares, well, also again, this is basically a one good big lesson for you to follow through and understand where you have gone wrong and why you basically lose all this money. But basically, to start from the basic, the price of Tesla has more or less moved up and up from latter part of last year, and then just recently got a lot of squeeze in it. Now, what happened is I think it's already on the news back in January or December time when the price sort of jump up quite a bit, and people has been writing on news on internet as well about possible bear squeeze, because I think that when those articles I first read come about around 450-500 US dollars mark, and then I suppose it just gone higher and higher, and you can actually I see more or less here is most likely large international funds or something, or hedge funds has been shorting the share price. Normally when you see share price actually moving up, doing very nicely, you don't see what happened the last couple of days. Sudden big large movement for 10, 20, 30% increase in a couple of days. And that's exactly what's happened on Tesla. And this basically, I think, also have the algo trade, possibly because certain price stop loss has been hit, and the computer just basically just close out the trade, and because loads of people has been shorting it, the large hedge funds, so you got this big squeeze, and now I think. People has also rumors that because yesterday a large price increase in Tesla, the public has been starting to take notice of it and gone in as well. But I hope they haven't done that, because if you have actually went in yesterday and look at today's price, Tesla have dropped back down to about 150 points or something. So this is a very, very volatile market for Tesla, but from an education point of view, from actually learning from how can we capture this kind of price move in the future, or reverse, how we can avoid this kind of disaster if you short it in the wrong time or the wrong share, what you can do about it. So let's drill down and see what we can learn. Okay, so for all those who have got the Tesla in the portfolio, congratulations. But for all those who haven't or have been shorting, it's not all lost, and you can learn from this and then basically make quite a bit of money later on. So first of the batteries, I got about 10 to 11 points that I have written down, and I just want to share with you. Firstly, trend following. So we just follow the price. Now, for people who have read some of the books I recommended in my podcast, especially the one called The Complete Turtle Trader by Michael Covel. and I think there's only one addition. And you look at Chapter 5, the rules. Basically, that is the total trading system. And there's two systems there. There's one short-term, one long-term. I normally use the S2 system, basically called System 2. It's a 55 days breakout system. And that's what I've been using. And simply using that, I can capture this market very easily. And from what I see from my log, basically this S2 system has captured total trading system 2 have captured the large price move much early on, back in October last year, and that is one of the things. So I mean, the rules itself is already out there and it's free. You just need to buy the book, and from wherever you're on Amazon, whatever, and then just read Chapter 5 or listen to it on Audible. But basically, from a trend following point of view, if you have a very simple trend following system, let's say not even the Turtle System 2, 55 days breakout system, just a simple 2 ATR system, like what I said, I use in my portfolio update. This is one of the systems I use myself for short term. Basically, you have a 2 ATR line, which is plotted on the chart. And basically, if the price above that, you buy; the price below that, you sell, and you would definitely make quite a lot of money out of that already. You would definitely capture the big large movement over the last couple of days. And my favorite, and it's always my my base trading strategy, is a simple 50 days over 200-day moving average. So basically, when the price is above both of those two simple moving averages, then you go in. When the price is below these two moving averages, you get out, or basically short the shares. So from that point of view, I mean, trend following system is basically encapsulated from from what I've seen from my own log. But you can also from deviate a bit from being a trend follower, basically price driven. If you look at the charts, it's always a lot of telltale sign there as well. Now, from my own charts, I basically can see there is a triangular formation happening since more or less early last year, 2019, and basically the price from January until July has been more or less coming down. It's making a triangle formation, and it sort of break out from the formation July time, and basically just continue with this trend line, and it basically touches that trend, the rising trend line about 4 or 5 times, and then which from a trend from a technical analysis point of view is a good thing, because it basically tells you that the price is having support and just moving up slowly and nicely. And the big things from there for me then is, like I said, the moving average system. It's gone above the 50 and 200-day moving average in mid-October, late October, around 23rd, 24th. And if you look at chart from share chart, price, whatever you chart you use, you see that around the middle of the month, middle of October back in last year, the price basically broke above the 50 days and 200 days moving average. It came back down a bit. We test the 200-day moving average and then shoot up a little bit, got quite a bit, about $30-40, and then stabilize and just go sideways a bit and continue to move up. And that is basically quite a good telltale sign as well, especially when the price broke above these two major, to me it's major moving averages, 50 days and 200-day moving average, come back down and we test the 200-day moving average and didn't break it, or gone below a little bit and could jump back up. That's also a telltale sign, a big telltale sign that tells you it's time to get in. Okay, so that was relatively good. It's really useful things to have, and basically we just continue and go that way. And from this this few pointers, and the other pointers is also when the above the 50-day moving average is above your 200 days moving average. That's from a just chart analysis point of view. It lines up, so to speak. So the 200-day moving average lines at the bottom, and then the 50-day moving average is on top. And if you go really short term, some people also look at 20-day moving average. That is also above, well above 50-day moving average. Well, that line of patterns, the 200 days at the bottom, 50 days in the middle, and 20 days at the top is also a nice indicator. Tells you the price is moving a nice overall smooth curve going up, and those are very good indicator to show you. But one thing though, from out of all these things, I have been saying in my portfolio updates in the last 2 or 3 weeks, I say I don't quite like this movement at the end, because it's very exponential, basic parabolic move. That is move up, like if you look at a longer term chart, let's say, look at the chart for the last 2-3 years, you see this last couple of days become, not even last couple of days, the last 3-4 months, it's more or less moving up in a 60 degrees kind of movement, and in the last couple of days more like a 90 degrees, just go straight up. Those are the type of things that is a sell signal to me, is from a chart point of view. And those are things and time to tell me basically be careful. For me, my trend following system all still say buy, don't sell them yet, even with the recent large price drop, or today $154 drop is still hanging in there. Now, so this is just a first initial analysis from looking at that. So from there on, from a trend following point of view, I have to say this, okay? All the charting things I just said a couple of minutes ago are all based on share price, okay? The price of shares here, okay, in this case is Tesla is the price. This is a share, but it can still applicable to indices or forex or commodities or Bitcoin as well. Bitcoin have similar movements back in 2017, those kind of times when the price moved up, like people talking about $20 US per Bitcoin, those $20,000 per Bitcoin, those kind of thing, and those are parabolic move. And look at what happened after that. So I think from just experience sake, I think Tesla after this big bear squeeze is going to come back down quite spectacular as well, but not going to be very bad. But I presume because Tesla is a good company, but I just have to wait for the price to show me. But from my own experience, anything that move, like a 90 degrees up, like a rocket going up, is basically something's happened, and it's not quite normal. In this case, this 90 degrees move is all because of the large shorting position by hedge fund. But what goes up must come down. How it's come down, that's another thing. So there's something that we can all learn from. Watch out for that. The other things that is worth mentioning is that couple of things too. Even without this particular last few days movement, to actually capture more of this, okay, of this price move in Tesla, you really need to basically buy in trenches. If let's say you got $100 and you want to buy, Tesla, you don't. Let's say $1,000. You don't go in one go and just buy all $1,000 from the first time when your when your trend following system tells you to go in. You basically buy in stages, in chunks, because trend following system, like any other system, it can lose your money. It has its problems, it has its flaws, but what we want to capture is when the price is moving in your favor, you add a bit more in that position. And if the price move in further as well, you gotta buy some more, and some more up to period up to 4. So your basic entry plus another additional 4 top up and trades. So overall, then you basically spread the risk until the price, basically the market shows you, or price of the share actually show you so moving in the right direction, and then you go add some more. If you continue moving in the right direction, you add some more. So that way, give you a lot more security that you know the price is moving up, and basically there, and this would definitely help you to have a bigger position in Tesla, for example. And then when the price really move, then we just basically let the price move, and then because you got a lot more additional trenches that you bought, the overall profit is magnified. Okay, all of this, if you actually want to read some more about it, you can basically just go to chapter 5 of the complete Turtle Trader. Okay, you can actually, all the details are there, and I basically just use the pyramiding as well. It's very useful, and I use it from all my systems to basically increase my the amount of money I can make from the market. But all of that as well, this is just more technical kind of thing. The other things that people need to remember is to learn from this experience is and again, I have to go back. I've got nothing against other people's strategy or forex or whatever, but there are people out there actually said you have to, have some sort of profit target or something. Trend following, we learn from here in Tesla, in the share price here. If we have a profit target, let's say I risk $10 to make $30, so 3 to 1 is good, or $10, risk $10 to make $50. That's good. Okay, for our strategy, but from trend following, we really want to capture some of the big, large movement. Now we all talk about black swan, okay, unexpected event that will really break your banks. But unexpected event go both ways, okay. If it's going in your favor, you really don't want to just get out, okay, because trend following by its nature is, it has a lot of small little losses. Okay, while your system try stay in a share when the share price try to find its patterns, okay, and trend sort of moves 20-30% of the time or every year, and also because you don't know when it's going to happen. So you basically, you're going in the market, you list as little as possible to find out if the market is moving in the right direction, and if it's, you add on top of it, and so forth. Okay, and the main thing here is as price moving up that way. Okay, you really need to be from an emotional point of view, you need to know how to stay with it. Okay, a lot of people just don't, because of price profit target. Okay, they have a predefined notion. I used to suffer from that as well. I thought, okay, let's just get I risk $10 and get $50. That's good enough and get out. But trend following, we try to capture the big fat tail, we call it. Okay, instead of black swan, you can say it's a white swan. When the unexpected event moving in another direction, it can help you make lots of money. You really don't want to get out. You really want to ride the trend until it's actually bends. Okay, that's the other thing here. You never know when the trend's going up. When you actually found one, you stay there until the trend turns. Okay, that's when people say, when a trend bends and bite your butt, and you definitely go to lose a little bit of money when the trend moves against you. That's fine, because you let the market tells you when to get in, and you also let the market tells you when to get out. This is very important. A lot of people just, because of having a profit target, they miss out. They miss out on big, large price movement, and they are on the side. Okay, and basically thumbing themselves. They cause themselves a lot of emotional issue because you're standing out on the sideline, keep on watching your share price just like a rocket going up and up and up, and you really wish you actually gone in. Now, one of the problem having that is, of course, you gone out earlier. So those type of people normally suffer from what I call the fear of losing. Okay, because they fear of losing out, they come out early, or just using wrong strategy, didn't let the profit run. Remember what the rule number one I always stick to is cut your losses short and let your arena once. Just let it run and run and run until it ends. It might go to the moon, I don't know. But when it's running and it's moving in the right direction, leave it alone, okay, and let it go and move that way. And those are very important for people to remember that don't have a profit target. This is one reason this trend following is very different from other strategy. We really don't have a profit target. We just let the market tell us when to get in and when to get out. And that, I mean, for this Tesla, for example, is months, okay? Quite sometimes, it's not a day trading thing. And you can make quite a bit of money out of that. And basically, because like I said, trend following on this one, Tesla, takes some time, the months. This is the reason that you need to be patient, okay? Yeah, trend, when it's set up, when it's actually running, it might take some time, and you need to be patient to wait for the trend to set up. And then when you get onto the trend, you wait for the trend to finish itself. And then when the trend actually bends, you let the market tell you when to get out. All of this basically waiting for the price to go your way, so to speak. And then when the price going your way, you wait for it to play itself out. And to me, I'm not sure about you, it took me a long time to learn to be patient, especially for a large price move. I learned that back in 2011, those kind of things, when the gold price really moved up quite a bit. And it's very difficult, especially when you got loads of money on the table and you haven't closed the price yet or the trade yet. So those potential winnings and losses, you're really scared of losing all this money, especially when you're not used to it. Let's say your potential winning is a couple of thousand quid or 10,000 quid or whatever it is, and you keep on seeing the price move up and down, and it just scares you. It scares me, and I always want to just take the money and, so to speak, and run, and it is difficult to go against human nature. We always fear of losing out, so we just get whatever we can and just run with it. But trend following by its nature, it is really to really capture the essence of trend following. It is quite often, it's quite long term. Long term, that means months, it could be years. And you really don't want to just chicken out, so to speak. You let the market tell you when to get out. And while that is happening, you have a lot of emotional battle. You really have to fight your own mental state to the urge to get out early, get the money and run, kind of thing. So this is another thing you need to learn when you actually in a trade. And if you're using trend following, you really need to be patient and let the trend run. And really letting the trend run means emotional control, and don't what they say, money burning in your pocket, burning holes in your pocket, and you have to sort of get out or something. Don't stop that urge. Just let the market do its things. And if you feel you really want to close out the trade, I suggest you get out from your house or computer screen, wherever it is, and do something else while your trade is moving in the right direction. And if you suddenly find the urge to try to close out because you are a scary cat and try to capture the money or take the money to the bank before the trend tells you to do so, I would say go out, do something. Go read a book, cook something, go do jogging, running, go clean the house, walk the dogs, whatever. Just take your minds away from those share price, so to speak. Don't think about it. And especially the way I trade, I use trend following trading using end of day data. There's really no need really to look at share price during the day. You may want to have a look at it lunchtime, just little 5-10 minutes, just have a look. But don't try to fiddle with it until at the end of the day you actually run your chart, look at the whatever you're tracking, and do your analysis. And then from there, when it's away from the market, when everything is calm, you're basically in a calm situation, and have a clear mind to think, understand, and analyze your movement, your how to take your next move. And that is more profitable for you, and you're basically able to control your urge to actually try to make a quick buck and just get out. That kind of thing. It sort of helps on that thing. It definitely helps me. So emotional control is important here, and it's something that you always learn. And the other thing, the essence for trend following itself is, like I think I said before already, you never get in at the bottom when a trend is establishing itself, and you never get out on the top. Okay, so for example, in Tesla, yeah, you might have thought, okay, if this large parabolic movement, you really hope that you have gone into the market. Where was it, like, when it's like $200 or something? But you never know the price. You will never. If you look back in hindsight, yeah, it'll be fantastic when Tesla went up to this $800 or something, or $930 yesterday, or something like that, something crazy from $200 or something. But because you never know when this sort of happens, how do you know at the start, this price move can go to the moon, so to speak? Okay, and then when on the other hand, when you look at 930, okay, I might think it's hard. I have my own biases, just like anybody else. But the market might just continue to run. It may become $1,000 or $2,000 price, and the trend is just continue moving up and up. And if you get out early, just like what I said earlier, you worry about losing your profit, and you get out too early, you get what you are scared of from the market. You lose out from the possible higher profit. So you really let the market tells you what to do, and just let the price run, let the winners run, so to speak. So that is important. Okay, so when it's a trend following in general, you never get out in the bottom, and you never get out the top. So potentially you have to give, you're always getting late, so you don't get the best price getting in. And when you get out, you always let the trend bend and move back against you for a portion of the time before you get out. How much of it is up to your strategy? For me, it's basically 2 ATR or your if you use the turtle trading system. When you use a 50 days breakout system on the reverse, when it's been down last 20 days, the lowest of the last 20 days, get out. You saw explained in Michael Covel's book. I suggest you go read it. But the essence is you always capture the meat of a trend. Okay, and that is your reward doing a trend following. Okay. There are things also, people has been also saying trend following really doesn't work, and you need to change your strategy to match what the changing market, so to speak. But remember, the other thing about this trend following system, I talk about this turtle trading system in Michael Covel's book. This strategy has been created or put together more or less scientifically and more structurally back in the 80s, and people still using and making money, as far as I understand. Not many people talk about it, but so all these people keep on saying, oh, you had to change the market, sometimes it doesn't work, or change your system because the market changes and you have to update your system. I would say, keep it simple, keep things simple. The simple thing, the moving average things I talk about, okay, price above the 2 moving average. This system has been there donkey years. Back in the early 80s, and probably earlier as well. People have been using it. I just found it during the 90s when I was first dabbling on shares, and those are very old system, old strategy, and it's freely available on the internet. And why do you need all this sophistication stuff? Especially for a busy person like myself, who have a daytime job, who have kids, and running around, have a family. You really don't have much time to make things too complicated, because you don't have time to spend all this time to do all this analysis, complicated calculations, whatever, to try to make money. You don't have to do that. You basically you can wait. Use very simple system and no need to change so much. Remember, simplicity is the best. Especially if you have some successful trader friends who are making money, feeding themselves, so to speak, from the stock market. You see them most of the successful one, you see them in a very simple setup, and they just basically follow that through. They don't really use complicated setup. And if those people are making thousand, tens of thousands, 100,000, money all the time, well, those are successful people. That's how the strategy is. Why don't we just mimic them? That tells you, quite a lot of things on that. So do you really need to keep on changing your system, jumping between system, or modify your system and doing things? Well, you shouldn't really have to. Trend following system, the essence is supposed to be loosely fit. Okay, it's not supposed to trend fitting, so to speak. It's not supposed to hug the trend so exactly and to make money. You don't need that. So it's more like a glove scenario. Like you buy a extra large glove. It's not very comfortable when you actually use it. It might slip off your hand, but it cover, because extra large or large size, it cover most hands. And that's the situation here. The trend following here, you want to use it cover most situation and make your money in most large trend situation, and that's what you want to know and want to do. So basically, I hope you learned something about this Tesla price move recently. And this basically is, from a positive point of view here, looking at the Tesla share price. I mean, it's fantastic you're earning the money, but it's also a lot of hidden lessons that you can pick from and then learn from it. So next time you see something similar, you have the price actually doing things, and then your trend following system see the price move certain ways, and basically your trend following system say, yeah, get in. And then you also see the charts on the share price chart shows you support, and it's moving up in a certain direction with some sort of support line being drawn on, and you basically see the price continuous stay above or test that trend line and continue move upwards. I mean, but all those come down to one basic component: price. So you don't need anything else. Basically, you just need the price. The price I'm talking about here is the opening price, the closing price, the highest price of the day, and lowest price of the day. Basically, the lowest the lowest price the share have made that day, or the highest price of the share that make that day. And volume, I mean, some people look at volume. I don't even look at volume myself. And that's all you need. And those are very simple figures that you can basically get from even online from historical charts, and it's all free. You don't really need to have a charting software to give you those details, but I have it just for analysis sake. It's quite easy for me and useful for me. So hopefully you learn something from it, and I hope you next time when this happens and you see some large strong move in some of the shares or indices or forex, and I hope you can basically capture all this money and make yourself rich. I will speak to you later then. Bye.